Hello folks, it's Monday. It's about 10:30 in the morning, San Diego time. We got a few things to cover this morning. First thing I'm going to talk about is a systematic shutdown of energy. And this is relevant to us as precious metals investors because mining mining takes a lot of energy. Without energy, we're not going to have mining going on. And so I noticed this in my reading of the news just yesterday. This is in South Africa. We've got a refinery shut down, and digging into this more in depth, it turns out that for the last 2 years, there have been refiners and capacity shutting down in South Africa. And of course, you know, historically, South Africa is one of the most prolific gold mining regions of the world. And again, without energy, there's not going to be any gold mining going on. So this is the largest fuel producer declaring force majeure. They shut down. They're done, and leaving just a fraction of the country's fuel production capacity left in place. All of their oil refinery out of action, other facilities suspended over the last 2 years. It's like energy shutdown in South Africa. They're down to 20%, so basically down to 20% of capacity. And of course, you know, where do you get your diesel fuel to run your trucks and your mill and, you know, all of the diesel fuel that gets burned up in the process of mining and processing the precious metals? Where's that supposed to come from? And isn't it interesting that here we've got a fire at an oil refinery, we've got an explosion at another refinery, we got something else damaged by floods. Sasol, or this is Petro SA, run out of feedstock. Keep in mind, something we all have to keep in mind is in the background, everything else that's going on in the world, we also have this green energy initiative. We're going to shut down all of the legacy energy producing capacity and replace it with unicorns and skittles, I guess. You know, if you look at the chart of where energy comes from, there's very little energy that comes from anything that's green or sustainable. It's all about oil. When you look at where does the world get its energy? It's oil. And so to think that we're going to shut down legacy energy production and replace it with green stuff, it's just silliness. Notice also they're saying that if these facilities fail to meet the new clean fuels policy, you know, basically the green standards, they'll be shut down permanently. They won't come back online. And so anyway, just a data point for us to keep in mind. There is a global shutdown of energy production. Here it is in South Africa. And of course, there's a couple of major miners in South Africa. You know, there's Anglo-American, Goldfields, Harmony. I think there's one or two others that we might recognize. And then some of the juniors also have projects in South Africa. And at least one of the streaming royalty companies has several projects in South Africa. And so without diesel fuel, a project in South Africa is worth pretty much bupkis, you know, it's not worth much. And I would expect the stocks of mining companies with exposure to South Africa, they will be affected by a lack of energy. I mean, just you can't mine without diesel fuel. And as I'm saying, this is worldwide. So here, this was back in June 10. We had an LNG. This is in Freeport, Texas. They had an explosion, LNG plant in Texas. And then we've got this month. So this was start of July. U.S. regulator comes out and says, well, no, we're not going to let you restart that LNG plant. They're saying maybe at the end of 2022, maybe sometime early 2023. So anyway, when the explosion occurred, they were saying, you know, a couple of weeks it'll be back online. Now it's the next week, or excuse me, next end of the year or early next year before that plant will come back online. Here was another LNG plant. This was this month. That was July 10th. So another fire at an energy production facility. And, you know, isn't it interesting? We seem to have a rash of fires and explosions occurring at energy production and processing sites around the world at the same time that we've got this green energy policy going on in the background. The EPA wants to shut down the entire Permian Basin, and of course that's Texas and New Mexico. It accounts for about 40% of the oil that we drill here in America. And the EPA is saying that they produce too much ozone. And so we're going to shut down the entire Permian Basin because it produces too much ozone. And again, like I was saying a minute ago, there's nothing to replace this energy with. If you look at the amount of energy in a barrel of fuel, oil, you just can't replace it with wind turbines and solar panels, and you know, it's not going to work. You know, we'll figure that out, but how many businesses are going to fail? How many people are going to freeze during the winter until we figure that out? So anyway, just something we need to be aware of as precious metals investors, that there is this effort to shut down legacy energy production. And the whole mining sector depends on legacy energy, diesel fuel in particular. Second topic. So on Friday, the ECB announced that they're going to come out this week, so the week that we're currently in, and they're going to announce this unlimited bond buying tool. And of course, the ECB and the Fed both, for the last 3 weeks, they've been in the debt markets. They're buying up everything. Corporate, municipal, and government of all durations. And so both central banks have been in the markets for 3 weeks now, buying up everything that's being offered. It's just on Friday the ECB decided to make it formal. So now they can do it publicly. They're gonna buy up all the debt that's available. And of course, how are they going to buy it? Well, they're going to print. ECB is going to print euros, the Fed's going to print Benjamins, and they're going to go out and they're going to buy an unlimited amount of debt. Now they're going to throw a bunch of fancy talk at us about this tool and that tool. But when we're working with the central banks, and it doesn't matter what central bank you're talking about, they only have 2 tools. The only 2 tools in the toolkit of a central bank. One of them is bullshit. They get the talking heads out there and we're going to raise rates. Oh, we're going to lower rates. We're going to quantitative tightening, quantitative easing. It's all hot air. And so that's their main tool. It's bullshit. And then the second tool is the printing press. Those are the only tools that central banks have. And so, you know, the ECB is going to throw some fancy language at us, and they want us to believe that they've got this a full toolkit with all kinds of tools in it. You know, we'll tweak this dial and we'll twist this, we'll twist this other dial and we'll move this lever to its highest position, and all of that it's bullshit. They only got 2 tools, and the main one, of course, is the printing press. And of course, here's the ECB bond tool. No limits. No limits as steeper rate hikes loom. And it's the markets taking rates higher right now. We'll look at a chart of the European 10-year note here in a minute. They don't call it a note, but 10-year bond in Europe. Interest rates are trying to head higher, and that's the natural movement in the financial markets is to take interest rates higher right now. The 40-year downtrend in interest rates, that's over. We had a breakout back in March and interest rates rose sharply. And of course, that's what the central banks are reacting to. They're trying to stop that upward movement of interest rates. And they're going to do it, or attempt to do it, by printing fiat currency and buying up every debt instrument that gets offered, corporate, municipal, government. They're going to buy it up with printed money, which of course, as a precious metals investor, in a way, that's a good thing. It's going to create massive inflation, and historically, inflation will ultimately drive the price of precious metals much higher. You know, that we can look at that as a good thing. As a citizen on planet Earth, the bottom line is that this is horrible. I mean, you know, the history of central banks mucking with currencies, fiat currencies, is not good. I mean, it's not, we don't have a bright future when the central banks are coming out and saying, you know, unlimited buying of bonds. That is not a good thing. Let's see, next topic. Saudi Arabia, I've mentioned this, they're talking about joining BRICS. Had another article just this past week. Saudi Arabia, yeah, that was Friday. Saudi Arabia, Turkey, and Egypt planning to join BRICS. And of course, Saudi Arabia is key to the petrodollar. That's the agreement that was established in 1974 between the United States and Saudi Arabia. The agreement says that Saudi Arabia will only sell oil in the U.S. dollar, and that forces every country on the planet that needs to buy oil on the international markets, they have to go find U.S. dollars first. And of course, that creates artificial demand for the U.S. dollar. It makes the dollar strong, etc. It's the petrodollar. If Saudi Arabia joins BRICS and agrees to participate in the BRICS currency, the BRICS nations want to develop the next reserve currency, that will mark the end of the petrodollar. Major change. That will affect all't markets on the planet if Saudi Arabia goes through with that, or is allowed to go through with that. It's not covered in this article, but I saw another article in the last week or two where it was talking about the BRICS nations wanting to form the next reserve currency, and they're kicking around the idea of having a basket of currencies. So all of the nations in the BRICS coalition will throw their currency into the basket, and that'll form the next reserve currency. Well, the problem with that is that, you know, nobody wants to hold nobody wants to hold the Turkish lira as a reserve. I mean, imagine if you're going to save, your kid's going to go to college 10 years from now, and you're going to save money to pay for their college. Would you save it in the Turkish lira? They've got 78.6% inflation right now. No, I mean, absolutely not. You know, you wouldn't put the Turkish lira in your reserves. And so anyway, this article was hinting at what the BRICS nations are running into with this idea of having a basket of currencies. Nobody wants to hold the currencies that would be in the basket. It is my opinion that the next successful reserve currency will be commodity backed. Now, that doesn't necessarily mean gold and silver backed, but some kind of commodity backing, tangible backing to the next reserve currency. Now, it may take several years to get there. You know, the BRICS nations may come out with what they hope will be a reserve currency basket of currencies at first. In my opinion, it won't work, and ultimately whether it's the BRICS nations or some other nation, the next successful reserve currency will be backed by commodities. And of course, historically, that means gold. I mean, you know, gold is the only real money on planet Earth, my opinion. I'm not the only person who holds that opinion, but that is my opinion. Last topic, and then we're going to jump into the charts. Chinese banks are in trouble. And of course, it started back in, this is December of 2021, when Evergrande started to default on their debt. And at first it was an internal default, and then they defaulted on external debt. Evergrande has about $300 billion in debt. It's the largest real estate developer in China, and the largest debt, I think, of any single real estate developer. And so anyway, this started back in December of 2021. And I heard an analyst at that point saying or suggesting that Evergrande marked the beginning of a bond default that would circle the planet. That basically at this point in our financial markets, everything is so interconnected that Evergrande was just the first domino in the chain. And of course, you know, obviously something happened in the bond market back in March, and that's why interest rates, you know, broke out of their 40-year downtrend and started zooming higher quite rapidly. And that's what the central banks are reacting to now. This is an article from Friday. The Chinese banks now are, you know, they're no longer able to hide the fact that they're having problems. It's funny, the Chinese citizens have stopped paying on the mortgages for condos that they bought. And of course, it's the condos in buildings that are unfinished. And so for years, real estate prices in China have been rising. Chinese investors have been buying these condos, 2 or 3 of them. You know, it's not uncommon that a Chinese family would have purchased 2 or 3 condos. One of the fascinating things about these Chinese investors, air quotes around investors there, they don't rent these condos out. And so, you know, they're buying a new condo, and if they rent it out, it'll be a used condo. And so they don't rent it out. And so we've got, last time I saw the number, it was 65 or 70 million vacant condos in China. Imagine that, 70 million vacant condos bought as investments. All well and good when prices are rising, but as soon as prices start dropping off, it's like, now wait a minute, maybe we don't want to own 3 vacant condos. What are we going to do? And so the whole game changes. And so anyway, what has happened, or what has become public knowledge in the last week or so, is that there are at least 100 condo projects that are not complete. And the developers, because it's not just Evergrande, there's multiple real estate developers in China that are in trouble right now. And they've either radically slowed down progress on their projects or just stopped outright. And so in 100 of these projects, the citizens have stopped paying the mortgages. They're saying, you know, look, I'm not going to continue paying the mortgage on this project that it doesn't look like it's ever going to be finished. You know, why would I pay the mortgage on that property? And so they've stopped paying. Now the banks are reacting and trying to figure out, you know, what are they going to do, which means that there'll probably be some kind of bailout for these, air quotes again, investors. And of course, how does a government or a central bank do a bailout? Well, once again, they go back to the printing press and they start printing fiat currency. I mean, it's truly a scary point that we have reached here on planet Earth, where all of the fiat currencies have been devalued to the point of worthlessness all at the same time. You know, for decades, the central banks could play one currency off against the other. You know, we had a quote unquote a strong currency, and we devalue a currency against the strong currency. Well, now they're all weak. So what do? You can't play that game anymore. They're all weak currencies. And so again, the game has changed. It's a brave it's a brave new world. Let's look at some charts. So here's gold. You know, gold potentially found a support level. We got a little bit of a bounce. This is this morning. You got an airplane in the background. Sorry if that's if you can hear that. So gold bounced up to the 20-day moving average, and of course you can see it here has pulled back from that level. MACD histogram hinting at, you know, maybe it's turning up. MACD still in bear mode on a sell signal. So, you know, this is encouraging action. Maybe it's a little bit of a bottom. Maybe we get some rally out of that. But all in all, that's not a great looking chart. Silver, same thing, looks a little bit better, but of course, you know, silver is far more oversold than gold has been. Bounce up to the 20-day moving average and a pullback from that level. This was Friday. We got a little bit of a bullish candle on Friday. Again, potentially bottoming action along a support level. MACD hinting at possibly turning up. Stochastics very low. So that's the precious metals. The mining stocks, similar story. You know, potentially two bottoming candlesticks there, Thursday, Friday, and then a gap up this morning. Actually pushed up through the 20-day moving average, but ran into resistance at the median line of this shift pitchfork and pulled back from there. And that's where we're at right now. Notice that although MACD is in bear mode, we did get, you can see that little green bar on the histogram. That's an indication that we got a new buy signal in MACD. Like, there it is. Yeah, I hardly see it. But anyway, the fact that the MACD histogram has given us a green bar indicates that we got a crossover. So that's a buy signal from MACD. Energy still very low. Hopefully we will get a rally in the mining stocks. My expectation is that if we do, it will only be a counter trend rally, and I will be continuing to lighten my mining stock positions. I just, with everything going on in the world, I'm not as comfortable holding mining stocks as I have been in the past. Here we've got the US dollar in the daily time frame. We can see we're getting a pretty nice pullback. I don't think by any means that the uptrend in the US dollar is over, but here in the daily time frame we are getting a nice pullback. Notice that we've reached, or the dollar reached, the median line of this modified shift pitchfork and bounced. And so, you know, pullback on Friday, pullback today, but it's already bouncing off that support level. MACD is very overbought. Looks like it wants to roll over. Energy coming down off a very high level. So we'll have to see how far the dollar pulls back from there. In the equity markets, they are bouncing up, so big, 1.9%. So this S&P 500 in the daily time frame, it got a 1.9% to the upside on Friday, gapped over the 20-day moving average. Today, you know, got another positive movement, but ran into resistance at the 50-day moving average and pulling back at this point. MACD in bear mode on a buy signal, energy elevated. Dow is quite similar. You know, basically is testing resistance at the 50-day moving average and currently pulling back from that level. MACD in bear mode on a buy signal, energy elevated. So S&P 500, Dow look very similar. NASDAQ's a little bit better, I guess you might say. It actually made it over the 50-day moving average, currently pulling back. MACD is the same, energy elevated. This is the yield on the Euro 10-year bond. I think they call their 10-year, we call it a note, looks like they call it a bond. So this is what I was referring to back in early 2022, the 40-year downtrend in interest rates ended, and it ended sharply, ended with a bang, if you want to think of it that way. And interest rates just started shooting skyward very rapidly. And then about 3 weeks ago, both the ECB and the Fed went into the debt markets and started, just buying up everything they could put their hands on. And so we're getting this pullback in, it's the same picture in the American debt markets, that we're getting this big pullback in the last 3 weeks. The ECB has been, they've been buying up everything. They haven't been saying that they've been buying it. It's only Friday where they came out with their announcement of this unlimited buying tool, which of course is the printing press. And so now they're able to buy up all the debt vehicles publicly. And I would expect that that's exactly what they're going to do. That's all I got for us this morning, folks. Just wanted to share, mostly wanted to share the news because, the financial markets are always interesting, but in my opinion, it's more important at this point to pay attention to the big picture. What's going on in the world? What's it going to do to us as precious metals investors? And I will talk to you soon. Enjoy the rest of your day, the rest of your week. Have a good one.